Well, hello and welcome everyone to your midweek currency room. This is Sankit here, and here we are in the second half of August. This is the exciting time or not exciting time, because it's not a whole lot happening as far as the market volatility goes. Every year is different. This year has definitely been on the quieter front. But at the same time, this is also the exciting time where, we start to plan out our, back after the Labor Day weekend. So this is where, definitely want to be in the planning phase, see how things are moving, and then sort of strategize the upcoming 4 months, because that's really where things start to pick up. All right, so let's just get into it. As always, we'll be taking a look at broader market analysis, take a look at what's going on the news front, take a look at currency baskets, and then most importantly, take a look at some possible setups. Let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
And here with the market analysis, let's just jump right into the news of the week so far. So this week, like I said, volatility has been low, but at the same time, we definitely noticed some risk-off sentiment in the markets. So that's when you hear the term risk-off sentiment, that's where the markets are sort of pulling back. There's a flight towards safety rather than a flight towards risk. Now, we talk about correlation. Sometimes correlation works out flawlessly, and sometimes they don't. This week has been definitely on the right track as far as the correlation goes. As the market did pull back, we saw safe haven currencies like Swiss franc, like the yen, and even the dollar, they all strengthened. Outside of that, we have the RBNC that came out last night and cut rates. And remember, it's not about cutting rates because that's all priced in. It's already in expectation, but it's more like the statement. And their statement was more dovish. We have started to see a little bit more dovish statements coming, and I think that's just going to weigh down on some currencies. So here we are. Kiwi finally broke out of that long range. We have seen Kiwi range bound for pretty much the last 4 months. Since April, has been range bound, and we're noticing a breakout here today. So we'll see if what kind of follow through we get. So far, the price action definitely looks weaker. Outside of that, like I said, it's a peak summer trading environment. I've talked about it many times. Volatility is low. You see pickup in activity here and there, but then it just quiets down. It's just because it's lack of participation. There's low liquidity. So even though when there's a move happen, you see a bigger move because there's a lack of liquidity in the markets. So that's really where we are. Now, when we take a look at for the percentage change, this is where, you look at the percentage change, you'd be like, hey, this has been actually a decent week. When we take a look at dollar, again, up 0.7277, Swiss franc being the strongest, 1.02. And now on the weaker side, we have the Aussie and the Kiwi. Again, Kiwi taking the biggest drop here, followed by the Aussie. So when you look at this board, this is a very typical risk-off board where money goes into the safe haven currencies. The European currencies don't do much. The Canadian dollar, which again is sort of tied to what the US dollar does, is not really doing much. And then what's left to sell is the Aussie and it's the Kiwi. So that's really where we are. It's pretty straightforward how the week has been. Now, when we take a look at how the broader markets are doing, as you can see that broader markets definitely showing some constraints, like gold is mostly flat, oil is slightly down. Definitely saw a big movement in crypto, but remember, crypto has been very active this summer, especially Ethereum. There's a lot of movements happening in the crypto, but outside of that, here we are, world stock index down, and here we are, S&P pulling back. And remember, this pullback is coming off from making new all-time highs. So it's no way or form, it's a trend-changing move. This is still just a pullback in the trending markets. Now, how do you confirm when the trend is over? That's where you start to make a lower high and a lower low. That's when you know the trend has changed. Now, here we are in the crypto world. As you can see, Bitcoin down 3.51%. Ethereum also down. So all together, you can see we're just seeing a big and fast moves come to the upside, and we also get some very aggressive pullbacks as well. But remember, Bitcoin still hasn't cleared that 122 level. It's kind of stuck there. Ethereum has the biggest move, but again, if you start reading about it, I think there was a big short covering that took place in Ethereum as well. So, and it's propping up that move. But outside of that, if you're just following whatever is moving, I think it's just the best way to trade the crypto markets. Now, let's go into the broader markets. Now, this is where we take a look at what the market sentiment is. As you can see that nothing really has changed. I mean, this is the prior resistance, which is now support. As you can see, we kind of did pull back. This is the, you can see that there was no real indication that this is going to pull back. It really just the last 2 days where we see this pullback getting us down to this 20-day moving average. Now, this is where either you're going to see, a further pullback, especially if the price action gets worse, or this is where the buyers come in and start to push it higher. Now, whenever I see this kind of pattern, first thing I like to look for is like a lower high and a lower low. That's when okay, I got this may be an all-time highs and we are turning lower. Right now, this is just a pullback to me. Now, we still have a lot of data to come out. We still have a lot of things to go through in the next month, leading up to the FOMC and highly anticipated 25 basis point cut. So there's a lot to go through. But as far as we stand now, it's a healthy pullback. I would love to see a bit of a rally here. And then if that rally fails, that's when maybe the market's in trouble here. But this is just a unique market. If you study up the markets, there's this big 10 stocks that contributed to the majority of the gains. So it just, those big stocks pulls down, they move the market down, they rally, they bring the market up. It's very highly concentrated into those big major stocks. Outside of that, it's not a whole lot of strength that you see underneath. So definitely a unique market condition. But as a trader, I always pay attention to what the broader markets are doing, because that's where we can get a sense of the risk sentiment, and that's where we get a sense of, where should I be looking for. Now, that's really what we have going on in the broader markets. Now, next step is news. So while we have this low liquidity period, peak summer trading environment, where do we get the moves? And a lot of times you see that things just don't go anywhere without a news. And suddenly, either around the market open, it's the European market open or the US market open, we start to see some movements take place. And that's really where you want to be active. In this kind of market environment, you want to be looking where the energy is and kind of pull back when the energy is out. Overall, you can see that this week, the biggest news event really has been this RBNZ. And that was, again, as expected, rate cut. There was no surprise there. But the statement was a little bit more dovish. So I think maybe this is where we start to see some of the growth countries underperform. Now, outside of that, not a whole lot of change out of the Canadian CPI. I think it was slightly lower. But then here we are, pound CPI last night that came out, and you can see, or early this morning, came out slightly higher. Now, that's what the news came out. Now, if you take a look at the price action, it seems like we got a bit of a buy the rumor, sell the news. I mean, we did see some pullback happen on the news, which is very typical. If something is not already priced in, if we see a run going into it, usually you get the opposite. You get a bit of a move up and then a pullback. On the other hand, when we went into the RBNZ yesterday, if you really look at the price action, the key was not going anywhere. So that nothing was priced in, or the rate cut was priced in, but the dovishness wasn't priced in. And that's why you get the big move. So I know I always find, or I get these questions which around these events that people find it confusing. And a lot of times you have to kind of think it from different perspective. Is it priced in? Is it not priced in? And if the price is already moving ahead of it, sometimes you get a bit of a selling on the news. And sometimes that's where we profit taking comes in. And then some people look at the number and say, hey, this is where I want to buy. But usually that's the time to sell. that doesn't mean that price action has reversed or changed. I mean, the trend is still there, but that's just a shorter term price action we're getting. Now, we still have some numbers to go through. Later on today, we have the FOMC meeting minutes. And that, again, we'll see what if there's any movement off of that. This is where, you have to kind of look at expectations. So here we are looking at expectation from the Fed rate tool. So you can actually just kind of search in, go to CME Group, or you can just type in the Fed, rate watch tool. This is where you can actually track and see what kind of expectation it is. So right now you can see that the markets are expecting an 85% chance for a rate cut coming this meeting. Now, this number has stayed the same, it was almost at 99%, but then after last week's PPI, which was way hotter than expected, this number did come back a little bit, but not so much where, market has to reprice. We are still expecting markets to, get a rate cut. But this is where if the number comes out wildly different, this can change very fast. So this is where you can kind of come in and check the tool and to see what the expectations are. At one point, we were expecting 3 rate cuts, which I know anybody look at that and say markets at all-time highs. Everything is doing great, and you're looking for 3 rate cuts, and that number has come down. So if you go to December, you can see that there's only a 39 or 40% chance for a rate cut. Now going to October, you can see that this is kind of sitting 50-50. I mean, we went from almost 3 rate cuts to now only, 1 fully priced in rate cut. And here we are 49% for October. So now this is where if the data comes out different, if the Fed, talks it different, that's where you can actually expect bigger move. As you can expect dollar to maybe move a lot as well. But right now you notice that everything's kind of holding steady wherever they are, not really trending higher or lower. It's just because there's no new information, and whatever information that we have out there is kind of already sort of priced in here. So that's really where we are in the broader markets or in the expectation here. Let me go back to our presentation here. So that's really what we have in the markets. We still have the Fed Chair Powell that's going to speak on Friday, but I think I'll be focusing on these manufacturing PMI numbers. If these number comes out hotter than expected, I wouldn't be surprised if the dollar strengthen on it, and then we see a bit of a pullback in those expectations for rate cut. If those number comes out worse than expected, what's going to happen is that dollar's just going to get down, and we're going to see expectation go up for a rate cut, especially going into October. So really, that's the reason why the dollar has been so back and forth. It's just moving a lot on those expectations for the rate cuts and then are they going to hold or are they going to cut? So that's really where we are. So that's what we're expecting for the remainder part of the week. Like I said, tomorrow, European numbers overnight and the U.S. numbers in the morning. And then Friday, we have the Jackson Hole Symposium. Don't really expect much, but I think overall market not really going to do much unless we get a surprise. So now let's talk about velocity, where things are, where the movement is. As you can see that the movement have been in the euro, dollar, and the yen, and Swiss franc actually doing the best. Where are the weaknesses? Aussie, Kiwi, and here we are, pound going as a -1 after outperforming for last 3-4 weeks, pretty much since the Bank of England raised statement. You can see that pound has done really well and now is stalled right at the resistance. So we'll take a look at it as we go, but we want to pay attention to what the theme is right now, which is a risk off theme, and that's what's moving. So if that theme changes, I won't be surprised if the yen pulls back. We see the dollar pull back. Euro kind of holding it steady, so I think that's really what's moving more steadily. But dollar and yen is really moving off of that risk-off sentiment here. So let's go in and take a look at some possible trades. And this is where you can ask questions. You can put in the chat box if there's anything particular you're looking at, and we'll take a look at it as we go.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
All right, so let's just start with the broader markets. Always do a top-down analysis and go down the timeline. We're going to take a look at where we are, and this is where, when I see a pullback today, I kind of look at the daily chart and say, well, is something breaking, considerably, like at these levels, or is just a pullback where we can see buyers come in? So because this is important information, because if I expect markets to stabilize here, then I don't want to go after that risk off theme. I might look for some reversals there. So as you can see on the daily chart, it's just founding support right at that 20 moving average. So here we are with the hourly chart. As you can see, we got a big breakdown today, and we've got a big a reversal right away. On a 4-hour chart, you can see the prices are kind of between 20 to 50. 15-minute chart, you can see that since the morning shout over here, the prices have stabilized. So I think if we're going to go for that risk off theme, it seems to be a little bit waning here. And based on where we are on the daily chart, we could find some support here too. Now, this information is important because if you take a look at what currencies that moved off of that, we saw the yen move off of that. This was that as the market pulled back, the yen sort of stabilized too. So does that mean, I should be careful for going yen long? Absolutely. Or maybe that's the time where I would kind of wait and see if it's going to break out above this high here. So from a technical standpoint, I mentioned that in our Discord group this morning and said, hey, this looks like a bullish reversal to me. We got a big move over here, pull back all the way, and then here we are. So no doubt that we're seeing a better price action in the yen. But at the same time, yen is also sensitive to these market pullbacks and so forth. If the market sort of stabilizes here, I wouldn't be surprised if it pulls back a little bit further. But yeah, right now, as you can see, this thing has just stabilized here, not going anywhere. So this is a way you get to decide, well, if this breaks out further above this level, I want to be a buyer. Now, if this falls back into this range, or if it just closes right here, then we might see a pullback getting down towards the support. So, it's 50-50. We'll see where it goes. With this lack of liquidity or, lack of participation in the markets, sometimes there's a lack of conviction. You got to move one way, it kind of goes the other way. There's not a whole lot of strong trend behind it. And this is one of the reasons why I'm not a big fan of trading in these kind of environments where, you're always kind of worried about if there's going to be a follow through or not, because the market movements has been, comes in waves. And then you're waiting, once the move is done and you're kind of waiting and seeing what's going to happen. So this is where you can actually go and have a bit of a buy stop order. Let's just say that if the yen goes up, do a pending order to see, okay, if this breaks out, I want to get in. All right, so that's what's going on with the dollar. I know I had a lot of questions, early in the week about the dollar as well. And, I would say that dollar is kind of, you can see the pattern, but, the way the dollar has been moving is kind of moving more on the data, but it has its waves. It did come down quite aggressively, it goes up quite aggressively. You have to be kind of trading it very carefully because it does make a difference where you enter. If you're entering it a little too late, and if the price is going to reverse quickly, then, you can do everything right in the books. For example, right here, you could have done everything right in the books. Say, well, it's breaking out. Maybe it's a pullback here I want to buy into. And then right away, you can see that was just we went down for like almost a few days, and now it's just kind of reversing again as well. So I think the best way to trade the dollar is to trade it, with these waves. So when there's a potential, there's a wave up, wave that way. If it goes away or it start to move other way, it's likely to kind of go back and forth within the range. And remember that this is a lot different than when you get this. Like last year, we had dollar pretty much one way. These rallies, every time you were shorting the rallies, that was the right play. And look at that price action that came here in October. And I mean, this is the strongest price action where it's just not a whole lot of retracement, not a lot of pullback, and it just kept going up and up and up. So I realized that whenever you're trading the price action, you're kind of trading the price action. Whenever you trade in markets, that's the price action you're trading. And this is the environment where, the swings have been great. I mean, look at this swing here. Look at this swing here. Now there's another swing coming up here. These swings are great. That's what you want to trade. But remember, the timeline for these swings are not that long. If you're trading on, let's say, a daily chart, these swings will be hard to kind of come by. But whenever you identify them, they have been a good risk to reward opportunity. So who knows how long this is going to last, this little rally here. But this is where we need to focus on what the Fed expectation is for the rate cut, and also keep a close eye on the broader markets. And then I think we'll probably find a little bit more clarity in the dollar there. Now, the Swiss franc, here we are, another pullback that got bought. And I mean, we are back at the resistance. And I feel like the way Swiss franc has been moving, if you have been a buyer, I mean, for the most part, has been a good trade. I mean, every time it has kind of reversed, and it actually reversed very strongly. I mean, so here we are right up against the resistance. Now, this is where we are back to the yearly highs. If I go weekly chart, monthly chart, I would say this is the best looking currency in the last 3 years. And it continues to run. So we are right up against that resistance. And around this time, I definitely want to be watching out for these resistance. If I want to look for a breakout, I need a confirmation. I need a confirmation that it's going to break out. I don't want to buy it right here as it, touches that level. And a good example of that would be a British pound, because, take a look at pound. The last few times we noticed that pound does reverse off those levels. And here we are. I mean, this time, look at that big wick on this little candle here. And then here we are closing back in the range. I mean, look at the big run that we had over here. And we got right up against the resistance. Everything looks great. We look all clear. And it just pulls back. So this is one of the reasons why I always recommend be careful around support and resistance, especially when, there's multiple times that we have tested that support and resistance level. So what do I think of the pound here? I mean, you can see on an hourly chart, it's just been selling off all overnight. So a lot of profit taking came in. I think this probably maybe this is the high for now. And I mean, just expect what happened last time. Last few times, it did that kind of reversal that proceeded with, a further pullback. So right now, I don't love to buy this pullback here. I think it's just stalled right up against that resistance. I think this needs to maybe go sideways a little bit or even pull back before it can go long again. You can see that price action looked very extended. I mean, all these candles have been just a one-way street. And it just pulled back. I think we might go sideways for a little bit here. Now, let's go into the other currencies. And I know a lot of traders are trading the euro right now, which is the right place to be. Now, what do I think of the euro? I mean, take a look at this one. It did break above the resistance, and it still continues to run higher. So I still like the euro to the upside. Now, the question is, what do you pair with? This thing, again, looks a lot more bullish here as it continues to move higher. So any pullbacks, very low volatility if you take a look at it, smaller pullbacks, and those pullbacks have been just a good, sort of a buying opportunity. So euro still remain on the plus side here, and I think euro definitely can be paired against, things like the Aussie or even the Kiwi. So here we are with the Kiwi, with the aftermath of Kiwi. This is the little gap over here, a big candle down and going sideways. Now, when I go on a daily chart, this is where I would, sort of draw the lines here and say, well, this is the level that it broke. And it broke very nicely. I mean, we were already kind of moving lower this, and here we are below the 20, below the 50, a massive move down. So after a big move like that, you want to see a bit more of a energy. Like, big energy got expanded here. We need to see maybe a little bear rally or maybe a base to form. On a 4-hour chart, this thing still looks pretty weak here to me, I think, but it probably needs to base a little bit. But this is where, if a currency pair like Euro Kiwi would become interesting if the Kiwi stays weak. I mean, take a look at this one. After breaking out to that new highs here, it's still going up. So I think this probably will continue to outperform here. Here we are in the longer term chart. As you can see that we are up against the level that we touched early this year. So Euro Kiwi looks great to me. Euro Aussie. Let's take a look at that one. Yeah, that thing is also moving nicely here, consistently higher up into the resistance area here at 184. So yeah, that's really where the movement has been. But notice that like these look a lot more clear as you go on the lower, even on the lower time frame. You notice that like you have areas to go long off of as long as you're following that trend and following those moving averages. That's really where the movement has been. I don't want to spend too much time on the CAD because I mean, CAD here's the resistance, and we have here's the support. We had the the CAD's likely to be range bound here, and if it gets a little weaker from here, I think we can easily get to it down towards the end of that band over there. So not a lot over there. So you can see that it really brings us down to fewer options. Now, a euro is the strongest. So I think comparing the strongest to the weakest, I think pound, the Aussie and Kiwi looks good. Another one that I think would look interesting to me, especially if the pound does weaken. I mean, take a look at that beautiful move today in euro pound. And I'll take you to the daily chart. I mean, this thing was not the clearest. It was stuck between 20 to 50. But remember, like this thing has been one of the good divergences that took place this year in the last few months. And if it starts to outperform here a little bit, I think it might be taking a look at it. But again, for that, we need pound to be weak. But I think it's still early to call if that was the top in the pound, are we gonna pull back a little bit, or do we just go sideways? If you just go sideways, then just keep in mind that's the currency pair that you're trading. And I think these ones, like I said, looks much better on a higher time frame for the pullbacks to kind of buy into. So yeah, euro pound looks interesting to me here from that risk to reward perspective. Let's take a look at other pairs. So I know we looked at dollar and the yen. So let's see how euro is looking against the dollar and the yen. So euro against the dollar, I mean, look very choppy here. I mean, you can see it is holding that level. 116 is acting as a support. And on the upper end is 117. So I don't really love this chart here. I mean, if you take a look at this highs here, we're still making lower highs. I would love to see a higher high and a higher low. Then the prices have changed. Now let's see if we can get a better price action in euro yen. So again, if this is all about what the yen's going to do, I mean, right now, as you can see, there is a range forming in yen. And I think I just don't love the yen. The way we trade the yen, especially going back to the last couple of years, we trade it one way, and every time it pulls back, every time it rallies, we short it. Like when there's a trend in place, the yen is great. But when yen goes sideways, then you see like it makes it a little bit difficult here. So when I look at this chart, now you have established where the highs are. Highs are around 174. It's sitting at 171.56. It's falling below the 20, above the 50. I don't love the chart here. Now, 4-hour chart, you can see same thing. Don't love it. So that's why, I mean, if you see, as we looked at the charts, your Aussie looked better. Your Kiwi looked better compared to your yen. Even when you take a look at pound yen, it actually made a pretty good, retest of that pound yen around the $2 mark, the 200, whatever you want to call it. That's the resistance that it really, got retested multiple times, and then here we go, just pulling back. So I don't really love the yen here. The only thing I can take a look at yen would be dollar yen. I mean, take a look at dollar yen. It's been range bound for the most part. As you can see, 146.50 would be the lower end of the range, and 148 is on the upper end of the range. Now, if you see the dollar getting or dollar catching steam here, that could be because some report came out and dollar is doing better on that, or maybe the Fed expectations are going lower for rate cut. If that's the situation, I think dollar yen would be a decent one to take a look at. But for now, this is range bound. So that's why none of the euro dollar or the yen pairs actually look the best here. I think that's really where we are. And until or unless we really start to break trends, which I don't know if this will be the right time to see that. Things might just go back and forth until it really catches its trend here. So I'm a little wary to catch a trend here in these environments, but I'm keeping a close eye on how things are developing. So then if the velocity accelerates, we are getting out of the downtrend here in the yen. If you take a look at it, we have been in a downward trend in this yen currency basket. But where we are right now, I don't love the yen short. Does that mean I love the yen long? Unless we have a big market sell-off, I don't really like that call either. I think this can go maybe less sideways a little bit here. Just like how the dollar is doing. Dollar is moving, but moving within the range. I think yen is kind of falling back in the same way. And then here we are. We looked at Swiss franc. It does have to clear out the resistance, but I think based on the chart, the euro has already cleared out the resistance. So I think that's the only spot to be. Euro or maybe Swiss franc. Outside of that, pound, I don't love it. CAD, I don't love it. And then I think Aussie Kiwi probably be better, especially here we are with the Aussie getting towards the bottom end of the range, and then most importantly, big break on this one, looking for some good levels to really short into. I think those are the best places to be. Now, when you take a look at charts, we look at euro charts. Even if you take a look at charts like Kiwi dollar, I mean, you can see, well, it did break lower off this little bear rally. So it looks extended here, but you can see if the dollar does strengthen, I would rather go towards maybe Aussie dollar or Kiwi dollar. If the dollar remains sideways and not moving much, then I think European currencies likely to do better. When you take a look at Euro USD, it kind of gives you the picture. There's not a big divergence taking place between the euro and the dollar. So that's why if you take a look at Euro Aussie, Euro Kiwi, or even Kiwi dollar or Aussie dollar, they kind of look trending. That's where the movement has been. I think that's where you want to be continue hunting. All right, Mark says, you think with the big move down in Kiwi and waiting it for bear rally or base, if risk off continues, need to be USD or CAD, can you look at Aussie CAD to determine what to use? Absolutely. I mean, good question. So yeah, a lot of times what we see is that, a big move's already happened in the Kiwi, and then we start to see the other currency follow suit. So I think the first thing I want to take a look at is Aussie Kiwi. So you can see that with this big move, this is the only place that we have seen a retracement. All the other currency pairs have been holding steady, but you can see that we got a big move up here, and it's sort of holding it steady. On a daily chart, you can see that it was a big, a breakout here. So, if the Aussie does weaken a little bit here against the Kiwi, that means that maybe Aussie is looking a lot weaker. So in that case, maybe I can take a look at Euro Aussie or Euro or even let's take a look at Aussie Swiss franc. I mean, look at beautiful move over there that we had. And even we take a look at Kiwi Swiss franc, looks very similar. Now, when you're looking at pairing Aussie CAD, now I don't really like that pairing itself because it's not that I'm picking the CAD as the strongest currency. Now, when you take a look at dollar CAD, that's the first thing you want to take a look at. And what do you see on a dollar CAD? I mean, you see a break. Here's the size, sort of it did right here, pull back here, held that support. It's actually breaking out. So now, if that's the case, then Aussie CAD would not really make a big difference to me. I think in that case, I would trade the Aussie dollar more directionally. And here's the interesting chart on Aussie dollar. Kiwi dollar already broke the support. Now, Aussie dollar maybe is the next one to fall. Let's just say, hypothetically, if this is the time, then I want to look for some confirmation that it is going to break that range. And you can see this range has lasted for 3 months. So could it follow suit? Absolutely. Now, if I want to follow that, I think I would rather take a look at Aussie dollar along with the Kiwi dollar. But for now, you want to set your expectations. It is catching a support here, so I don't want to jump on it right here at this point. But if it start to break below this area, which is about 64.15, I think then the price action start to look a little bit more convincing over there. Okay, so not the pair, but look Aussie and CAD versus Euro and Yen. Sure, let's take a look at that. So we already looked at Euro Aussie. So you can see this thing broke out nicely on a daily chart. And if I scroll out, we still have a resistance to catch about 184. So as long as it holds this level and you can see like the moving averages start to pick up, yeah, this probably be a good, a good pair to take a look at for the continued upside. Absolutely. And then we can also look for pullbacks. The 4-hour chart looks extended. Love to see a pullback or a base to kind of buy into, kind of moving along with that trend. Now let's take a look at Euro and Aussie yen, because again we looked at how the dollar yen is doing. They're kind of doing very similar, and here we are with the Aussie yen. I mean, this thing from a textbook perspective, it's a perfect lower high, lower low, because here we are making a higher high, higher low. Here we are making a trading that change of that trend, making a lower low, lower high. Here we are making another lower low, another lower high. From a textbook perspective, I think that looks like a beautiful short. And again, this is where, when you look at certain currency pairs like euro dollar or dollar yen, you can see there's not a whole lot of divergence taking place. But you can see what's moving. Dollar is moving, yen is moving, euro is moving. This is where I don't mind the idea of just, diversifying, because we don't know what's going to move. Then you can take one small position in, let's say, Aussie yen, one small position in Aussie dollar, or in one small position euro Aussie. If that's what's going to move, then it kind of gives you exposure without putting all your eggs in the same basket. But again, like from this technical perspective, I think that looks like a beautiful change of that trend. Especially this trend has been in place for the last few months. So yeah, I think that's notable to take a look at Aussie yen. But for that, I think you got to take a look at equity markets too. If you're looking for acceleration of that move, then take a look at broader markets. If broader markets pull back, I think yen likely to do better in those situations. I mean, while we are speaking, let's see how the markets are doing. You can see that the markets are sort of way off the lows, and based on the price action today, I wouldn't be surprised that it tried to rally up a little bit here. And if that's the case, we're not seeing a lower high and a lower low in the market. So I think I will be a little bit more careful with the yen. But this is where I love to use pending orders. So here what I have with the yen here. I don't love to buy or sell here because we just don't know where it's gonna go. Markets are rallying, but you see the yen is sideways. But we could see a yen sort of pick up its pace in the Asian session. So this is where you get to draw the support resistance line. If this yen basket goes higher or break above that high, then definitely I'm more interested in that, because now the yen is showing better outperformance. But if this goes sideways, market stabilize here a little bit, I think maybe in that case I'll take a look at against the euro. Maybe see if against the Swiss franc, which I would rather wait for the breakout. I think euro probably be the best one there. And I mean, you can see dollar is kind of not going anywhere today either. So this is where I would rather kind of wait and see. And otherwise, if you're always in a position, you can't. If things turn on you, it's just moving or having a bit of pullback. So the trend is still there. It's just the shorter term velocity has gone the other way. So hope that helps. And then we can also take a look at euro yen, which again, euro yen not the best pairing because euro is strong and yen is strong. Now, if the yen weakens, could I take a look at euro yen? Possibly. And in that case, I mean, here's a moving average here. Here's a moving average here. You notice that it's just the technical setup is not the greatest. It's a lot of noise and overhang here. So unless you're okay to trade that range, and then the bottom end of the range is 71 and the upper end of the range is 173, if you're okay to trade the range, I think that's what we probably see this go sideways for a little bit. But yeah, as you look at setups, I think setups look a lot more clear in other areas. Yen, not the best setups right now. Yeah, but you can see that even right now in the shorter term, euro, Aussie is pulling back. So whenever you have a trend in place and you see a pullback, this is not the right time to enter. But at the same time, this is a great year when it does pull back. Use the pullbacks to buy into. Those are probably the better sort of a strategy if you want to get part of that move. Same thing if you think I think yen is going to strengthen in the coming week. I think market's going to take a little tumble. If that's the premise, then you want to look for pullbacks to buy into. And this is why I love kind of preparing for the fall, because that's where these bigger themes will play out. Do I think the market's going to fall apart in the next week? No. But when the volatility comes back right after the the Labor Day, and we get the jobs report and we get some inflation data, that's where you will start to see more volatility pick up. And right now, you can use the VIX as a market volatility, as you can see how lower the volatility has been so far. This last few times, every time the volatility has popped, it just kind of gave it away. So the volatility remains in a downtrend, but historically speaking, volatility picks up in September and October. Usually those are the worst, 45 days in the markets as far as the market performance go and volatility goes. Now, market has gone, a lot up. I won't be surprised there will be a correction somewhere along the lines. But I think, it's a little too early to make that call, but definitely something I'm gearing up for. And I think yen would probably fit in really well for that. Another thing I was kind of showing everybody was the top 10 stocks. So here's a little currency basket. Here's a basket for these top 10 stocks. As you can see, this is what drive the markets higher. And you can see there's big pullback in all those big stocks, like Palantir, or you got Oracle, like all the Max 7 stocks. Like we're seeing a profit taking there, and that's why we're seeing markets pull back. So keep an eye on the broader markets. Look for, like I said, a lower high and a lower low to really confirm the trend change. But till then, maybe it's a little bit indecisive. It could go really either way. But I think that's something you want to look for in the next coming week or two, and see how these big themes play out, especially the yen, especially the dollar. I think those will be the one we need to pay close attention to. And for that, you can also take a look at these levels. I mean, look at how choppy dollar yen has been for the last 2 months, July and almost mid-August. When these ranges are going to break, there's going to be definitely a good, interesting move. So this is where, spend some time doing the charting and create some alerts. This is where charting is great on TradingView, because you can just set up alerts. Say, tell me if this breaks this level. Tell me if it breaks this level. Add some alerts there, so then if anything happens, it notifies you, and that's where you got to make that change. All right, one last thing. Let me also take a look at the bond markets. I know I didn't take a look at bond markets today, but you can see the bond markets are overall in a range. That's why just not a whole lot of concern out of the markets. So we'll find out what's going to happen. I mean, you can see the last few days, the yields have gone up. That means, the expectation for rate cut has kind of come back a little bit. But I think that still remains the bigger piece to sort of, a puzzle to unsolve. What's going to happen with the Fed? With markets being at all-time highs, are the numbers going to get better or worse? If the next jobs number, let's say when it comes out in the first week of September, I think big fireworks can take place. Those are the moments that you want to prepare for, because that's when there's going to be a bigger activity. But your goal should be not to worry too much about shorter term, like these small movements. Take a look at ranges. If the range is good, that's what you want to be trading. When the ranges are very tight, just like how we looked at dollar yen, when the range is so tight, I don't have no desire to change that, trade that range. But when the ranges are like this, where, it's like a few hundred pips to be had, that's definitely where you want to be trading more often than not. So when things are sideways, I know that's the hardest sort of trading, but wait for these levels to be broken. That's where you get a green signal to start playing it more directionally. So that's something I'll be paying close attention to coming this fall. All right, well, let's wrap things up here. I don't see any more questions, but as always, throughout the week, I'm very active on Discord. So if you have any questions, anything you're looking at, type in there, like ask questions. as a community, see what everyone else is doing. But yeah, expect volatility to remain low. We might get these little pops here and there, just like today, but that doesn't mean that will have a big follow through. I think we still want to wait till the Labor Day and then let the volatility kind of come back and see the VIX shoot up. You start to see lower high and lower lows, like see a trend changing move to establish that. But until then, trade what's moving. There's decent moves that we have, like for 1 or 2 days, 3 days, get in and get out. Like that's just the right way to trade it. But keeping the powder dry is a great strategy. I want to trade less, but I want to be more active coming September. That's where the transition happened, and you want to be ready for it. You don't want to be gun shy at that point. You want to be ready for it when that happens. All right. Well, thanks for joining. See you. Enjoy your rest of the day. Enjoy your rest of the summer, and we'll get back all hands on deck. When we return after Labor Day. All right. Take care, everyone. Cheers.